of a girl running out of a car to hug, I guess, her boyfriend or something. And she jumps up, but when she jumps up, he slips and slides back. So he fell under her and she fell over him on top of
Oh,
him.
oh,
Yeah, again, the caption says long distance relationship or something. And
okay.
she jumps up, but when she jumps up,
It's
he
okay.
slips and slides
Oh,
back.
please mute it. Please mute it. I know. Hold on. It's not.
Yeah.
Hold on.
Um,
All right. How did I do this last time? Okay. Did I? Kelsey.
oh yeah, I'm here.
Okay. I think we good. I think I did this right. Hmm. Well, should I? No, no, no. Cut it off. Kelsey.
Oh yeah, I'm here.
No, see,
Okay, I think we good.
it's not right. It's not right. How did I do this? Hmm. Can you hear me now?
I can hear you.
It's still coming through live though.
It's not picking me up.
I think I need to mute this.
Right. Uh, well.
Yeah.
Got it all.
All right, Kelsey, can you hear me?
Yes.
Okay. I want to say we good, but
Can you hear me?
yeah, I can hear you now.
Okay.
I can hear you now. Question is it recording?
I think it says that we are live.
Yeah.
Yeah, I see that in I guess that what you're sharing your
Oh,
screen.
it does say live. Okay, it says.
Mhm.
I wonder if it. Okay.
Well, it says that we're live.
All right, it's working. All right, let's go. Let's go. Let's dive into the market. Hmm. I well, I had like the Apple for puts, and I do know that we did a test with Apple on one of our classes where we just bought different options. So let's take a look at. I'm gonna let you share your screen. Are you ever bring your screen up right now or no? Is this a good time?
Yeah.
All right, let me stop sharing. I'm gonna let you share. Let's see how this works because this will be the first time doing this on a live. All right, again, everyone, welcome to Trader Ridge. Here we here with another live session with Kelsey. We're going over some charts. And again, everything we talk about here is for educational purposes only. We do not give investment advice. Please seek a qualified broker. All right, so we're going to look at some charts. We are using a Thinkorswim platform, and other platforms may come due like TradingView, stuff like that. We are not affiliated with anyone. We are just strictly using this for educational purposes at this time. But you can use any charting platform you like. Now, let's go, Kelsey. We're gonna try this. I'm gonna see if this will allow you to share. So let's see what happens.
Yeah, mine is frozen for a
Try it
second,
now.
so I'm gonna try to. I don't know. Mm, okay. Let's see. All right. Yeah. So I might have to. I don't know. It's kind of frozen.
It's frozen, huh? Hmm.
Yeah.
Try to log out and log back in.
No one even let me in. I don't know. I think I might need to restart my computer.
Okay.
Yeah, because I can't click on anything for some reason, and then I was trying to get off of this. It won't even. I'm clicking it, and all it will allow me to do is make the screen smaller, but it's not actually exiting.
Okay, well, go ahead, restart and um go out and come back in. We'll wait. I'll pause everything.
Okay, all right. All right, give me 1 second. I'll call you back. Hey, I'm back and up and running now. Okay. Share, trade.
Hold on 1 second, Kim.
Okay.
All right. All right, let's get into it. Let's get into it. All right. So technically, you would have been out of these trades right now, but
Ah.
we got them in here so that we can see how the market works. So this is a trade that went against you, right? It's not um it's not in the area that we needed to be. Or it went against us. So we should have been out of this trade on that initial turn yesterday when the market failed. Um,
Both of them?
actually before this. So this is good to see because okay, so I want you to look at the first option or the December 22nd option, right? All right. So now, no, that's the go back down to that one right there. Okay. So if you go here, you see your trade price is what? 190.
Oh, yes.
Okay. How much is it worth? What is the mark? The mark is the current price.
Mark 105.
Okay, it's 0.105. So that means it's only worth 10 cents.
Mm.
Okay, so that means you're down $1.80 per option. You're down basically 90, almost over 90% on that option. So now let's go up to the December 29 option, which is at the top. You paid 257, and the option is now at 80 cents. So you down what, $1.80 on that also. But the difference is you have 8 days left for it to work. That makes sense?
Yes.
Okay, you have a 197.50. So in this case, because you bought the extra time, the difference between 190 bucks and 257.60 bucks, it was worth it because you still have money left and you still have time for this stock to do what it do. But again, you would have been out of this, but let's just say you didn't get out. You still have hope, in other words. Or if you get out, you still have $80 times 2 is $160 that you would put back in your account. You would take a loss of $357 is what that is saying. But you will have the 160 back, but you actually will lose $357. That's when it says P&L open. P&L open is how much you are down on the actual stock. P&L day is how much is down for the day.
Mm-hmm.
Okay. Now, if you go to January, you see the January, you have 15 days left. You paid $2.11 for the option, and you are currently at 83 cents. The difference with this one is you see it doesn't get hit as hard. You're only down 13 cents for, 13 cent change on the option, where it says mark change, and then P&L open is down 255. So you can see how this one you're not getting hit as hard. You're not getting hit as hard, and you are only down $26 for the day. Does that make sense?
Yeah, because the time, I guess the expiration time is later.
The time. So you have time for this option to come back and make you some money or get the value that you have back.
Mm-hmm.
All right. Now, so now let's say you wanted to sell these, which we should. So let's go to the December one, and I want you to hit right click. Right click, create closing order. There you go. And then sell. It's already set up for you. That's the nice thing about Thinkorswim. It's kind of pre-default, I guess. Click on it. And you see where it says sale -2, Apple, December 22nd, 197 calls. You selling them at 10 cents. Now, some people would say, okay, is it worth selling, taking this 10 cents? I mean, you only gonna have $20, but you got to look at, okay, so maybe it's not worth selling. Go up to Apple, put the Apple options in up top. Right now it's sitting on Tesla.
Go to charts.
Go to the options, December 22nd option.
Oh, okay. Where is that? Right here?
Yeah, hold on 1 second.
Mm-hmm.
Oh, that was weird. All right. So December 22nd, go there.
Right here?
Yep.
Okay. See.
All right. So you see where it says 197. The stock is trading at 194, right? You have the 197.50. You can see the stock price up top. It's trading at 197.50. And I mean, you have the 197.50 strike price. The stock is trading at 194. This option expires tomorrow. Your chances of it going back up there is very slim. So if you go over to the delta, that's how you can always tell without having to do all the math. You go over to your left, it tells you the delta. The delta is what?
109. Is that like less than 1%?
It's 9%.
Oh, 9%. 9%? Oh, 9, just 9%. Okay.
Yep, 9%. So the thing is, at this point, why keep it? Unless you want to see if it's going to go up and get above there. But at that point, you also needed to trade above that strike price. You need to get it above to like 198.
Hmm. Well, mhm.
So let's just go ahead and sell it. So you can have the idea of how to sell it. You see, it's already preset for you when you click on that create closing order. So then you go over, you hit confirm and send.
Already set. Okay.
It's going to give you a breakdown. Sell 2, 197. You're going to get your profit coming back to you is $20, basically. Minus the commissions is $18.70 coming back in your account. And then you're going to hit send. And this is a simulated account. So for people that don't know.
Well, how does it? So it shows me how much money I made. So where?
No, it's just showing you how much money you're going to receive right now. Which is $20. You didn't make any money. You actually lost on a trade because you paid one. I forgot what it was. We said 160 or 180.
Okay, then why is 1870 going back into my account?
Because remember, it's 10 cents of value left in the option, and you have 2 of them. So 2 times 10 is 20. So you got
Okay.
$20 minus commission, which is like 60 cents an option. So it's $18.70 coming back into your account.
Right. Okay. Okay. It goes.
And then so you click sell, and you will see that that position on the 22nd is gone. All right, you no longer have that position. So,
And
um,
where do I see that exactly?
well, you can see that it's not there anymore on under the December 22nd. It doesn't have a POS next to it. But go up to your trade, go up to monitor again at the top, and click on Apple. Click on the drop box. And you will see going across, go down to the December 22nd, quantity is 0 instead of 10.
Okay. Right. And it has 1 day left.
Yep. And so you can see going all the way across, P&L open is 0, everything is 0. So
Except
that's
for the day.
yeah, but that's because you got 1 day left. But
Oh, okay.
that's how much it was lost today on that option was $30. All right. So now, um, the next one, let's just hold it so we can see how it play out. But what I want to do is I want you to go in. Let's go to the Apple chart. We're gonna actually play it. We're gonna act like we're gonna hold both sides. I want you to just see how options work with. Okay. Now, if we go over to the top here, you can see the doji that came in, right? And then
Right.
that doji, that high doji, 199.62 doji, 2 days
Oh.
ago, right there.
Mm-hmm.
And you see the small one right below it, so a lot of indecision. But what is that between that doji and this doji?
There was a gap.
A gap down, right?
Yeah.
And they never went back up to fill that gap. So a gap down, and when we have gaps, you remember what happens when we have gaps? Probably about 70% of the time,
Mm, it corrects it, I guess, depending on how big the gap is.
So it's going to go in the direction of the gap, correct?
Oh, right.
Now,
Okay.
how far and all that is always a mystery, but this is like a common gap. It's not like a breakaway gap. It didn't break away from an area. It's all in area. This is a nice common gap that's setting up. But usually it's going to go in that direction. So we're coming down slowly, nice gradual fall on Apple, and we're looking for a move down. If we break the 20, we can go a lot lower, which is right there. Ah, dang it, hold on 1 second.
Why are my lines different colors? I fixed this yesterday. 22.9. What? What is wrong? I think it's Can we get this correct, please? Because what
All right,
colors?
I'm back. I'm back. I'm back.
Hmm.
What's wrong? Your colors, I don't know what's up with the platform, why yours won't.
Yeah, I don't know either. It keeps messing me up, changing everything. 200. What do you think about the 50?
The 50 is a cool indicator. It's another indicator where investors like to buy, but the 20 and the 200 is really probably all you need. I mean, the 50 is cool. Nothing wrong with the 50.
Why not then? Let's add that to 50. Okay, now it's back to normal. Nice. Okay.
All right. Um, so in this case, that 20-day moving average, which is approaching right now, if it breaks that, then the stock can go lower. So the question would be, let's say that it did break that. What area would you look for it to go to?
I would look for it to go yeah, here,
Yep,
this
right in
area right here.
right in that area, 188, 180. Now, why did you pick that area?
Because this is where the previous floor was.
And how do you know that's a floor?
Just looking at well, the zone, I know it's the floor because how do I know this is the floor? Um, I mean, looking at the candles and the wicks here, this is like the zone that all of them kind of came down to and then went back up.
Yep,
Yep.
awesome.
Mhm.
So basically there seems to be a lot of buying and selling. It was like a zone up and down, up and down. So there's a battle, and we know that the Bulls won because of what did the stock eventually do? It popped up and went high.
Right.
So 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 we're good there. So that's perfect. You recognize the support. So now we look to trade this. Now we haven't with much inside. We haven't went inside of the charts a lot to look at, like to get into like when you should get in a trade. But right now we're just getting in trades based on the charts and based on the daily. We're not timing them down to the T. In this case, So what I want you to do, I want you to go to the Qs. Let's start with the Qs. All right, coming down. Okay. So, you see yesterday's big candle, correct?
Yep.
Nice sell-off, right?
Mm-hmm.
So, with that sell-off, we went right to the 20. And we bounced this morning because we closed where? Where did we close yesterday?
Uh, that's this one, right? Yeah.
Yesterday.
No, no, this one. We closed at 403.08.
Mm-mm.
No?
Nope, nope. Oh, yeah. I'm sorry. Yep, you're right.
I'm about to be so confused. Like, wait a minute.
I'm sorry. Now
Okay.
and then go to today.
Uh-huh.
What happened today?
Let's see. What was it?
Closed at 403. You said 403, I think it was.
Yep, 403.08. And then today we opened at 407.
Yep.
Okay,
Okay.
so went up a little bit, but
We
why
gap.
is that?
So did we gap up?
Yeah, we gapped up a little, a few points, pips,
Okay.
whatever they're called.
So as of right now, that body is sitting inside of that body, correct?
Yes, yeah.
So this is what they call right now. If the market was to close, obviously we still got 2.5 hours. We have what they call a pregnant bearish Harami pattern forming.
Pregnant, bearish.
Well, let's
Haram.
just call it a
Okay.
bearish Harami pattern or a pregnant
Okay.
candle because this body is basically embodying inside of this red candle that's next to it. All right. Now this red candle, and then you have this candle, which is red today, but it's actually a green candle because it gapped up. It's just lower than where it opened at. So that's why the software is saying it's red, but this is actually a green candle because it closed at 403 yesterday, opened at 407, and right now it's trading at 405. So technically you are still up for the day, right?
Right.
So this is a pregnant candle. So the next day is going to be very pivotal to the markets, which is tomorrow. Usually you get follow through or a birthing of a new move up or down. In this case, this is more of a bearish symbol because it's been an uptrend. So when you get a reversal like this, you usually will have follow through where the market will eventually go down. Even if this went sideways tomorrow and be pregnant with twins, you're still looking for this market to go lower. Now, the more it goes more it goes sideways, it kind of makes this pattern invalid. If it start getting 3, 4, 5 days, then it's not really a bearish pattern anymore. It's becoming more of a sideways move, which is probably setting up to go higher. All right. That is something to kind of remember because you're gonna run into charts like that where they just like even if you go back to your resistance area, I mean your support area where this thing could go eventually, you could see the sideways movement of those candles. Matter of fact, you had a Harami pattern right there. If you go back, other way, green candle right there, boom. And then the next candle is the inside day, boom. And then it just went sideways. It did pop up a little. It just went sideways, boom, 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 boom. Came down slightly and then took off right at the 20, which is
Mhm.
textbook. Okay. So that's another thing. So our first area that we should always look at is the 20-day moving average. Well, first the 8, that's where it's trading at right now, because the 8 is always a signal of institution buying or selling. All right, if it breaks that 8, then the institutionals are selling. If it keeps bouncing off the 8, the institutionals are buying. Now, the 20-day moving average is a key figure for most traders, including institutionals. If it stays above a 20, then we look to trade this to the upside. And Bitcoin must be selling off right now. Go to coin real fast. Bitcoin is selling off because this stock, it's saying it's up too. Oh, that's Costco in the red. Wow. Okay, so this is Bitcoin, or this is Coinbase. It follows Bitcoin and every movement of Bitcoin. So you see Bitcoin has been rolling, so this stock has been rolling. I think this stuff can go higher, just the way Bitcoin trades. So let's go back to our Apple. No, yeah, Apple. You're right. Okay, so hold on one second. All right. So on this chart, you had a gap down, a bearish engulfing pattern, and now you have another candle that's breaking the lows of the previous day. So this chart is really weak. Okay. Or it's starting to break down. I wouldn't say it's really weak, but you have clear signs that there is a pullback coming in Apple. All right. So let's say we want this thing to come down to that area of resistance where not resistance, support. Go down to that area and tell me where that area is. That will be our first target. That's 187, 188. Okay, so now what I want you to do is go up to trade.
We're gonna short something?
Yep, we're gonna short Apple.
Oh my gosh, I'm excited.
All right, so now you're gonna go to the other side of the chart.
Oh, yes, right. Yes, the right side. Okay.
Yeah. Okay, so now we're gonna go out a couple of weeks. We always want to buy ourselves some time.
Mm-hmm.
Don't want to be too risky. So this is so go on your left hand side tells you the date. So right now you in December 22nd options, which is only one day.
Oh yeah, don't want that one.
Don't want that, right? Okay.
Nope. So let's do, how do you pick?
So go. So you want to go a couple weeks out. So we got 15 days, 22 days. Ideal is 30 days, but that's going to be kind of expensive for a lot of people. So let's go at least 15 days. Let's go with the January 5th.
Okay.
All right. We go over January 5th. Our target is 187. Okay. To keep things safe, we always want to be in at least a 30-cent delta or more, which gives us a 30% chance or better. So if you go over the delta, this one is an 18. So go down. We got to go with a 192.
Okay, so this is a higher chance of it going
Correct.
to.
Got a 40% chance of this stock going to that price and below it. All right. So let's go ahead and buy. And again, this is not buying recommendations for anybody. We're just doing this based on the chart so this is practice. So we go to the 199 Apple, 192.50, 199, 198. So you're gonna go to the AX price. You're at the 192.50 strike price, 15 days out. And you can see it's moving actively. So click that. And again, this is a simulator that we're on right now. This is not real. So you go down to the bottom. It's got you buying 10 contracts. You can keep it at 10. That's fine. But it's $199 a price. So that means you would need $199, basically $200 for the commissions on top of that. And you can see this thing is moving down because now it's $2. So if you go over and hit confirm and send, $2 times 10 is going to be $2,000. So hit confirm and send. And if you didn't have 2,000, you got 200, it'd be $200. But the whole thing is, it's still the same math. All right, so we can see here. Max profit is 190,000. Max is the 2,000 that you put into the actual stock. Okay, that's the max that you can actually lose in the trade. Of course, we will sell it before that, but that is just if you just did nothing with that option and the stock did nothing in your direction, you will lose $2,000 because you cannot lose more than what you put into the stock. All right. So you're gonna just hit send.
Can you explain what these are? What is it? How is it the max profit is that much?
Yeah, because if it goes up to a certain dollar, your break even is a 190.50. But if it goes up, they basically taking that each option that you have and they times in it. You can make it 190,000 on basically total on that option. If it goes up, I don't know what price they actually calculate that on, because really the stock can go higher, 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 keep going. But there is like I guess there is a limit to how much you can make because they will exercise the option. I mean, that gets a little deeper into options that I don't really look into because I don't ever plan on holding them forever. So
Okay. Yeah.
But yeah, so you could basically make 190,000 because you can exercise the stock at 190 and exercise and actually own it and you'll own those shares, 2,000 shares at 190. So go ahead and hit
Send?
yeah, hit send on the order. Oh, it would now you gotta bring it back up.
Oh no, I hit send already.
Okay. Oh, you did. Okay. Oh,
Yeah.
it just bought it. Okay, at the top there it says bought 10. So go to monitor
Mm-hmm.
and then you can see, boom, 10. There you go. All right. So let's see what happens. We will keep an eye on this over the next week. Now let's go ahead and sell the other options because you already know that what we think the stock is going to do. You already seen how they move to if it goes against you. This is why we like to look at stop losses. So that's the next thing we're gonna look at for this current trade we just placed on. Where do we get out of this trade at? Now you didn't know how to do that until now, so now we're gonna get out of this because you probably should have been out of this 2 days ago, but it's all right.
Agreed.
So, all right,
Agreed.
click that, right click.
Oh, right click. That's why I wasn't working. Gotcha.
Yep.
This
Yeah.
one,
Yep.
get rid of it. Confirm and send.
Confirm and send. She said get rid of it.
Okay. Mhm.
All right. Then you're going to go back and sell the other one. I think it's one more you need to sell.
How do I go back to here?
Yep. All right. Now go to monitor. You should only have one trade there, and that is your one we just bought. Now let's go to the chart.
This one.
And let's see now if this stock went against you, where should you be getting out of this stock at?
If it went, uh, hmm, I will get out. Hmm, Um, I would get out here.
That's a little high. You want to come back down to the gap. Just come down just a little bit. Keep coming.
Oh,
Back up
okay,
a
the
bit.
gap.
Go back up. Go back up. Up. Right in there. You want to get out. If it breaks that top, that red candle from previous day, or that green candle,
This one
2 days
or
ago.
this one?
Yep. The next one. The next. Yep. The next one. Go over one.
Oh,
Up
this one.
to your right.
My right, this one.
Right there.
This one.
Yep. So if it break into that area, you probably should be looking to get out of it. Now, a lot of times you might, if it breaks up, you don't want to jump out of it right away. You kind of wait a second to see, wait a few, ideal would be to wait to the end of the day to get out of it because a lot of times these stocks will break out to the upside and then sell off before the end of the day. But if it did that big reversal, because that's like a 4 point, 5 point reversal, then yeah, you just get out the way. All right. Does that make sense or any questions on that?
It makes sense, but things are getting kind of intense now.
All right. So, we talk about gap downs, gap candle patterns. Let's go do some candle patterns. Let me bring up my candlestick chart and we're going to talk about some more candlesticks.
Okay. Can you pause it real quick?
Yep. I cannot pause.
I just need to take a quick bathroom break. I mean, you don't
Oh, no,
have
do
to.
your thing.
I
No, go
just
do your thing. Go do your
okay.
thing.
I'll be right back.
Yep.
Okay. Back. Back and better.
Awesome. Hold on. Mm-mm-mm. All right. All right. Let me. All right. So candlesticks. Let's get into it real fast. It's been about another 15 minutes, and then I gotta Things. Let's see. Getting pull up more than what I thought. All right, candle. Why? It's a class. Candlesticks. Well, I had my book until I reset the computer, and that took everything away. Oh, here we go. So Steve Neeson is like the pioneer. I think I mentioned this before. He has a lot of good stuff on candlesticks. He got one called the Candlestick Course, which is a good basic book. But a lot of the same stuff is stuff that he teaches also. I mean, it's just how candles work, period. But that would be a book I would recommend for candles if somebody really wanted to learn it. All right,
Yeah.
I'm going to share my screen.
Mhm. Can you repeat his name again? You said Steve Neeson?
Steve Neeson.
Nissan, like Nissan.
Neeson. Yep, Nisson.
Go in. Okay.
That's no
Nice.
Nison, actually.
Oh, I see. Yes.
All right. This is for trading. This is for educational purposes only. Now we have width over support resistance. We went over trend. I think you got that down pretty good. Candlestick patterns, dojis, and shadows. We have withdrew those. Just the importance, like when you start seeing shadows near resistance and a support level, that is always a sign of maybe something is changing in that trend, because candles always come in what type, and candles always come in. Let me say it again. Candle reversal signals always come in what type of trend? Not what type of trend. Dang it. Forget it. I can't talk today.
Cycles? They
They,
come in cycles?
they come in trends.
Trend.
Candle reversal patterns come in trends.
Mm-hmm.
Um, so so since they come in trends, when you start getting these shadows after a nice move up or a nice move down, you start getting shadows like here. That's usually a sign of buying pressure coming into the stock. Okay.
I have a question.
Yes.
Can you remind me what the shadow is?
A shadow is the top. It's basically creating. It's the top of the body and the bottom of the body, and usually they have those wicks. Let me see.
Oh, okay, it's the wick.
They call them wicks.
Okay, okay.
And then you have the wick. So if you get the
Right.
wick at the bottom, wick at the top, a lot of times they call it, like this particular one would be a spinning top because the body is real small.
Mm-hmm.
This one is just a lot of indecision. It's bullish because it's up, but you can see the indecision in the stock because it went up, came back down, went down, came back up, or vice versa. And so when you start getting these shadows, it's usually a sign. In this case, that we're looking at is a sign of weakness. Even though they keep attempting to rally it up, what does it keep doing? It keeps selling right back off. And eventually this stock just broke down and went a lot lower. All right. That makes sense or no? I want to
Yes.
make got it down. All right. So shadows are always an indication of some type of weakness. It doesn't necessarily mean that you're going to get the move that you're looking for in opposite direction, because it can strengthen back up quickly. But this is a good way to, like, as a warning sign, especially as support, that people are buying that area. All
Hmm.
right.
I have another question.
Mm-hmm.
So you said the shadow or the wick, it shows weakness. Could it also show potential? Is that like the same thing or is that different?
Um, say it one more time.
So the shadows, which are like the wicks, right? You said that they show weakness, but could they also show potential?
Nah, at the potential, in this case, it's showing potential weakness
Okay.
in the series of shadows up there. But
Mm-hmm.
um, but
Okay. Yeah,
it,
I think I
it's
get what
not
you're
showing
saying.
the opportunity to the upside because every time it pops up, it keeps selling off.
Right, okay.
So eventually, it's going to sell off. Is basically what it's saying.
Hmm.
And eventually, that's what this stock did. Now, can it go sideways and then eventually pop back up? Yes. But you have to favor, all you have to go off, all you have is what to go off on. And these shadows keep telling you, hey, there are some issues right here. And
Hmm.
you need to pay attention. So the more it does that, the greater the opportunity for you to uh, pick the direction that you wanted to go. So in this case, if we keep trying to trade this stock up and we keep getting shadows, there's a good chance that the stock is about to tank.
Right.
Um, so that is definitely something that we're gonna pay attention to more on these charts, or you're gonna have to recognize. So again, here's one at the bottom where you see a series of shadows, and then boom, it pops up. It gets to the top, and what do you get? More shadows.
Hmm.
All right. What time is it? Oh, it's not one. 1 second here. All right. So quick review of these. You got the hammer pattern. Oh God dang it. Hold on. All right. Okay, so you got a hammer pattern. This usually come all these are bullish reversal signals, so they always gonna come in a downtrend, right?
Right.
All right. So downtrend, when you get these in a downtrend, you will look for these type of patterns to reverse to the upside. So now, so a hammer is a very powerful pattern. A lot of times they will try to test the pattern at the bottom again. All right. We go up, we can see here's an example of one boom, boom, and then it takes off to the upside. All right. Here's another example of a hammer, boom, to the upside. And I'm gonna go through these kind of fast because we've been through these before. And then
Right.
look, here's a test, and then bam, bullish engulfing pattern to the upside. This is a very powerful pattern. I love it. When you get this, it just shows the momentum of the bulls and how they have taken the stock over. This body engulfs this body. All right. Quick examples. Boom. There go another one. Um, then we got another one. Boom. Inverted hammer. This is a weaker pattern, but it can make you some money. Now, usually when you get this is right here. That's a sign of boom. It could move up. Then you can see here as a move down. Bam. Boom, 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 boom. Then turn around to back to the upside. Bullish reversal pattern. Pearson pattern. So basically the stock gaps down, turns around during the day, and closes up above 55% of this red candle. All right. So this was a down move, opens lower, like continues, and then turns around. That tells you that the bulls are now starting to gain momentum. All right. Same. So here's an example of one. Those are kind of rare. Here's the pregnant candles. So usually these are the ones that are reversing to the upside. Okay, these are bearish. They call them inside days. They don't take out the highs. They never higher than the high. They never lower than the low. The body is basically inside, like a pregnant woman. All right. Here's the example of one right here. But they own a lot of charts. This is a rare pattern, but it's a bullish counterattack. It basically closed here yesterday, opened at this price, closed at the same price as the previous day or somewhere very close to it. Tweezer bottom, you basically get identical lows. Identical lows are very close within pennies, very close to each other. All right, example of one. And then your Morningstar pattern. Your Morningstar is a 3-day pattern. Basically, what happened, I love this pattern. Basically, it gaps down. It leaves this on an island by itself. You usually have like a doji or a smaller candle. Okay. But it gapped from the previous trend. So it's been moving down. Boom, boom, boom. This is almost like an exhaustion gap. It's like the third or fourth gap. Usually it is. And then the next day, boom, it gaps up. And this green candle has to carry within 55% of this candle to be a nice move. But the key is it gapped up. It gaps up and then it goes up. And usually that is a sign of some real bullish action. All right. And you want this pattern, it takes 3 days to form or 3 cycles in whatever chart you're looking at. It's very powerful on a daily chart, though, of a reversal.
Hmm.
All right, it's my favorite pattern. It definitely it works all the time. I'm not gonna say nothing's 100%, but I can tell you that this one works good. Right. Let's see here. Boom, boom, boom.
So a gap down and then a gap up.
Correct. Let's see if I can get this in real fast.
I don't think I've seen too many of those.
You might not have, but they will. You will start seeing them. Now we've been in an uptrend for a while, so
Hmm.
so you haven't really probably seen. But if you go back and look, you
Right.
might run across them.
Or maybe after this period.
Correct. Target. Okay. Yeah, that's it. Okay, 1 second.
Hmm.
Right. All right. Mm. Okay. This thing is in my way, so I can't see what you can see. Gotta move this out my way. All right, so you can see the bottoms here, Morningstar patterns, and how they form is different variations of them. Sometimes they don't have the gap on more intraday patterns. You won't see them gap, but if you get them on a daily, a lot of times you will get that gap. Now, Bull Sasha, another favorite pattern. Basically, the stock closed down here at 100, gapped up to 105, and followed you above the high of yesterday. Very powerful pattern because it's taking out all the bears from the previous day, and it's trying to pop up to the upside. Let's see. So you can see, boom, 1, 2, very powerful pattern. This one led to a huge rally. Very powerful pattern. So then we have gaps. trying to get this doggone this bar that they have. Uh-oh. Did I lose it? Can you see anything?
It says end of slideshow, click to exit, and it's black. There, okay, just came back up.
Oh, I wonder what happened.
It's up now. I see gaps. Windows are gaps.
The whole equal. That's really weird. Okay. Hold on one second. Let me see if I can get the next part of this.
Mm-hmm.
The heck? That's weird. Hmm. Hmm. Wow. That's the one I opened today. Hmm. I don't know what's going on with my files. But for some reason, this thing would not come up. Oh, okay. Let me see what I got here. Okay. Is this the whole thing? No. For some reason, it's not opening for me past 87 pages. That is so weird.
Mm.
Hmm. Okay. Oh, it stopped sharing. Interesting. Profits. So weird. Okay, let me go to this. Let me see how this works. Right. Same thing. Oh, no. Yeah. Why is it stopping at 88 pages? All right, I'm gonna have to figure this out, and then we're gonna have to pick it up from there on our next session because I don't know what's going on. Let me see this. This is weird. I think this book. Okay, I'm gonna open a different format.
Mm. Yeah, I wish I knew what to tell you, but I'm not that savvy with.
Come on. All right, here we go. All right, I'm gonna open up this one. All right. So this is your gaps, ups and downs. All right. So when you get a gap up, that is, we have talked about this, but that becomes your support zone. And you usually would trend in that direction of the gap. Now, if you have had a series of gap going up and you've been in sustained uptrend, there is a good chance that you can run into a exhaustion gap. So the exhaustion gap is where you would see the stock reverse and start to come down.
I think we had one of those, right? In Apple.
Correct. Well, no, because it didn't gap up; it gapped down. That was the beginning of the.
Oh.
Okay.
Mhm. Yeah.
So the gap down is a bearish move to the downside. The gap down shows how strong the bears have control. The bottom of the gap is the first resistance area. The top of the gap is the second resistance area. We have to close above the top of the window to fill or avoid the gap area. Usually gaps will get filled at some point. All right, that's just something to remember. So here is a gap down. Where's the gap down on this? What is this? Oh, this is a gap up. I'm sorry. So here's the gap up right here. Boom. So this gap, you can see when it came back down, all it did was come to the gap. Even the shadow traded right inside the gap. And then it took off to the upside before coming back down. All right. Here's the gap down right here. Okay, and then here's a move down. It just followed through. It kind of went sideways, but look how the gap held resistance. The top and the bottom. So basically this whole zone is resistance.
Right. See it.
All right. You have a gap down here.
Mm-hmm.
My mouse set right here. Boom. And then bam. So this was after a doji, long-headed doji. So this was a warning sign. There's actually a small gap right here, one, and this is a breakaway gap right here, or maybe even like a runaway gap. So here's a small common gap, and then boom, break away from this area here, boom. And that's going to be a momentum play to the downside.
Okay. Question.
Go ahead.
Yeah, so back to when we were looking at Apple and we did the short and you were asking like when would I get out of that trade? And I think the answer was if it goes past that little gap. So that's correct, right? That's what we looked at for Apple.
That's correct.
Okay. Okay.
And I could bring it up if I could find where my chart is.
Yeah, just confirming. So once it reaches back to the other side of the gap, that's confirmation that it's gonna go back in that direction.
Correct.
Okay.
I don't know if my charts are up anymore because I can't select it. That's so weird. Huh. I can't select charts. It's so weird. This thing is weird today, man. All right, I can get off of this. All right, so here's some more downward, like that's a gap down. See, that's a huge gap down. The smaller the gap, the better. These big gap downs they want to fill these things eventually.
Where is that?
Are you able to see the charts right here? See that big?
Yeah, see the oh, okay. Yeah, it's so big. I was like, where's the rest? Okay, I
Right,
see. Yeah.
right. So we like the smaller gaps because those are more
Mhm.
all right, the big gaps means all the cellular done jumped out the thing.
Mhm.
And then here's a gap up. See where the lines are. Boom, boom, boom. And then here is a gap down again, another big one. This,
Mhm.
yeah, I took a break because it was so big, and then it started selling off some more. This one, a gap up usually means I would go in the direction at the top and bottom of the gap will act as support. But this one went up a little bit and then sold off quickly. See how I filled that gap? Then it went back up and boom. Once the gap is filled, they usually are trying to fill the gap and create a new trend, usually in the stock.
Can
Say it again.
can you explain what you mean by filling the gap?
So right here, you see how this candle came down. This was the area. See that? This was the area.
Mm-hmm.
Boom. And then this candle came in and it voided out that gap.
Okay. Okay. Yeah. Mm-hmm.
Remember, this is supposed to be a support. So once it
Right.
reaches that gap is filled. So
Gotcha.
eventually we'll go back and fill the gaps. Sometimes the gaps could be there for years, but sometimes, usually within days, it will fill the gap.
Okay. So back to like the Apple one, if
Mhm.
it fills that gap, then that's letting me know to get out at that
Right.
point.
But
Okay.
it might not fill that gap for another couple of weeks if it's
Okay.
at this point.
Right. Yeah. Hopefully not. Yeah.
I don't know why I can't share my chart right now. Hmm. Okay. So that's that. So then I'm gonna go do these quickly, then we're gonna get off of here because I
Hmm.
gotta be going. This is a shooting star. Now, this is a bearish reversal signals. First time I was really talking about all the reversal signals. So the bearish reversal signals are signs of when things are moving fast to the upside. When these things come in, you got to pay attention to them. The thing with reversal signals, though, is that they moves are usually fast and hard to the downside. Falling happens a lot harder than going up.
Hmm. Hmm.
Because why do you think that is?
People panic, like you said, and they want to sell, sell, sell.
Right. So it's
Uh,
called fear.
Fear.
Fear grips them and fear takes over, and that is it. So
Mm.
that's why when we see sell-offs, they happen hard and fast, like we did yesterday. It happened at 2 o'clock. Um, the news with Biden and China and stuff came out, and everything just started to sell. And then today, we've been up and down today in certain stocks like that.
What
Um,
what was that news? I missed that.
uh, China threatened Biden, let them know that they want Taiwan and they're gonna take Taiwan from them. It's something they've
Oh,
been for a while. So
yeah. Mm.
this probably is the ideal time for them to do it because the U.S. has got their hand in so much other stuff that
Right.
it's time to attack. So we'll see.
And
Uh,
mm.
so shooting star comes at the top. It opens up. It goes up. The bears take over. Comes down, and it is like an inverted up. It's like an upside down hammer pattern. So it has that body. So the body would be like the head, and then you have the stick, the hammer, and it's like it's sitting on the head at the top. That makes sense.
Yes.
And then you have, so here's the example here. Boom. Uptrend, boom, boom, boom. You get this long shadow up, and then boom. And by the end of the day, this thing was trading back down, all the way back down, and then boom, look at the momentum that carried it down after that.
Hmm.
Another example right here. Boom, shooting star. Come down. And this is not a shooting star, but this is a form of one or a variation, you would say.
Hmm.
Okay, and but look what it did. Same draw out. That long shadow tell you that sellers are there. Um, Another example right here, top and tail. Boom. All right, hanging man. So this is a hammer pattern. It's up in an uptrend. And then you have to get confirmation with this particular one. If you get a form of a hammer, and the reason you need confirmation is because why? Why do you think you need confirmation on that green candle? It has a long what?
Has a long shadow.
A long shadow, right? So
Mm.
that long shadow tells you
That
that
shows
some. Say it again.
sellers.
Yeah, that was sellers, correct. Exactly. So,
Mhm.
so when it came back up, the bulls took back over, but that wick there tells you that that was a sign of something going on in the stock. So you need the next day to know who's going to win this battle, and
Mhm.
so that you need that next day to confirm. In this case, that's how it should look, something like that. Obviously, it's not going to be perfect. I want to go to the next slide. Let's go. All right, so these are hard to find a lot of times. There's one right here. Perfect. Bearish engulfing reversal pattern. So this is opposite of the bull. So remember, we're in an uptrend, and then you get this candle up, and then you get the engulfing, that red candle engulfing the green. That is a bearish reversal pattern. And this is a very powerful pattern, active, definitely something to pay attention to. You can see here up at the top here, see that bearish engulfing? And then the stock just dove down
Yeah.
after a nice uptrend.
Mm-hmm.
Here's another example one, boom. And then where is it? Where is it on here? Huh. I don't know if this pattern. Oh, there it is over here. I'm about to say what? Boom. And
And
then
another one to the right.
yeah. And then this will be the last one. We'll get into more hopefully tomorrow. Dark cloud cover. You can see how this covers. Now they call it a cloud because it opened up, it gapped up, and then it closed down inside the candle. You want at least 55% inside. But this is an uptrend. Boom, 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 boom. Keeps going. By it hits resistance, or that will become resistance. And then it's sold off inside. They call it a dark cloud because now you got this red candle covering this green candle above it. Does that make sense?
Okay.
The strong pattern though, when it appears, really good pattern. Here it is right here. Boom. All right. And then this is a form of what we have going right now, a pregnant candle. We like that candle, even though it's red, we like the candle to be green, but to me it's still a pregnant candle, because if this is a tweezer top. No, this is a tweezer top. I'm sorry. Basically, you at the same area of resistance.
Mm-hmm.
Okay. And it's like the same area. Maybe it's off 10 cent, 20 cent, but it's basically the same area. And then here's an example. You can see how it's kept trading at the same area. And then boom.
Resistance.
Yeah, resistance. Yep.
Mm-hmm.
So let's keep going through it. We're gonna go through these some more. But those are very reverse. So they basically, if you look at it, it's basically the same, except it's just opposite. The patterns are opposite because of the trend that is in. But you're looking for the same type of pattern, it's just in the opposite trend. But the more and more you look at it, the more it's going to come, and the more we talk about it, it's going to come and be easier. Let me see if we can charts real fast. If I can get my charts up, probably not, because it seems to be tripping. Why? But the market is dropping, which is a good thing.
Oh, 193.
Here we go. All right, so this is with more indicators and stuff on it, which we haven't added totally to your chart yet. We will start adding lower indicators, probably maybe this week or coming. But eventually yours will look like this. But let me take off this just to make it easier. A lot of the stuff you don't use, you only use at certain times. I'm just used to looking at it. So the main thing is the moving averages and the position of the stock. That's it. That's where a lot of the money is made.
Moving average and position of the stock.
Yep. I'm not seeing how I can remove these studies like I did normally. All right.
Not all studies.
Yeah, the moving averages are gone, but you can see, boom, boom. I can bring them back up. But so our goal, we got a little small gap right here, side of here. They're not giving me a drawing. Huh. Won't let me draw. That's so weird. I don't know what is going on today with this thing. All right. So
Sleepy.
yeah, I don't understand it. 15 minutes. So we go inside the chart. We gapped up. Hold on one second.
Mhm.
Okay. All right. All right. So we go inside the SPY, or this the Qs, the NASDAQ, trading the tech stocks, right? We could see this early today. We could see the sell-off yesterday, right?
Mhm.
Okay. Today it gaps up, right? Comes down, and then it fills the gap on this last, actually in the last 15 minutes, they came back and filled the gap. So the key to this now, will they start buying right here? You can see they already like the shadows, the doji, the indecision that's here. So we want to see if they're going to buy, or will they go ahead and sell it off and continue this lower. All right. That is basically where we are at. Got my eye on Bitcoin. I think Bitcoin can go higher this weekend. So coin is a stock that you can trade for Bitcoin. Obviously, you can trade Bitcoin yourself. You can trade the smaller stocks, but it's very possible. But again, this is a 15-minute. Let's go. So you always going to use a daily and a hour chart. So this is an hour. Let me go to the market again, the Qs. Oops, one too many. So same, you can see the same type thing, action, boom, come down, try to fill the gap, which I don't know if it really even filled the gap on the Qs yet. It hasn't filled the gap. So if it did fill the gap, then you're looking for it to go lower. The SPY, hold on one second. All right. All right. Apple. Let's play the game. Play the game. Play the game of Apple. So Apple sold off yesterday, popped up today, and then sold off even more. All right. Now, is Apple at a support level? What do you think? I don't know why I can't draw a line. What is going on? Oh, here we go.
It's getting close to it.
Okay, so this used to be an old, where it just stopped at
Oh,
an hour, used to be an old resistance.
right.
Okay, so it's just temporary holding here until
Mm-hmm.
it's ready to break down. All right, we go to the daily, and we can see that line superimposed over here is almost identical. Look at that. So
Mm-hmm.
once it breaks down, then we look for it to go down to the area here.
Right. The old floor.
Yeah, the old floor of 188.
Okay.
All right. If it breaks that, then we are going into 182 area.
Okay. That's another resistance.
Correct.
Okay.
All right. So let's wrap it up here. But now we got the Apple trade going. We're gonna see how that works out. We went over some candlesticks. If you get any more questions, write them down. We will go over them, and we will hopefully try to get on tomorrow, maybe this weekend for sure, and make it happen. Make it happen. All right. Thank you, Kelsey. I will talk to you soon, and we will make some money.
Thank you, Coach Reg.
All right. All right, Kelly. Hold on, Kelsey.
All right.